Hi guys, welcome back and thanks for watching another recap of the last 24 hours and the outlook for the next 24. Coming into the market today, trading was neutral. We were trading in a sideways range from yesterday's close. The main story from today is that the Fed cut rates by 50 basis points to a target range of 1 to 1.25%. This was the first rate cut outside of a regularly scheduled policy meeting since 2008. Powell made several significant comments today, including, quote, "We've come to the view now that it is time to act in support of the economy. I do know that the U.S. economy is strong and we will get to the other side of this. I fully expect that we will return to solid growth and a solid labor market as well." He also said, "We do recognize that a rate cut will not reduce the rate of infection. It won't fix a broken supply chain. We get that. We don't think we have all the answers," he said. So he also said that it will help support overall economic activity. So as we'll see, the reaction that the market had to these statements and to the whole situation in general was initially pretty excited that there was a rate cut. We rallied very quickly, very fast, and reversed it because there's a lot of uncertainty over what exactly is monetary policy going to be able to do. I mean, Powell said himself, we do recognize that a rate cut will not reduce the rate of infection. It won't fix a broken supply chain. So in light of those things, that's just the kind of general sentiment that the market has. It's pretty interesting to see the reaction because for a very long time, any kind of Fed put or accommodative monetary policy was something that the market absolutely loved and ate up. So it's going to be interesting to see moving forward if that continues to be the case. So also earlier today, Powell said that top finance authorities from the world's 7 largest advanced economies agreed that they would take all appropriate measures to support the global economy, suggested that future coordinated action could be coming. Interestingly, also, for the first time ever, the 10-year Treasury yield dropped below 1% as traders may be pricing in additional upcoming rate cuts. So the calendar up ahead is really the only thing on it that I'm interested in is going to be the job numbers on Friday that reflect February. So yeah, with the market hungry for more stimulus, bad news could be good news depending on how confident the market is in monetary policy being an effective tool to address the coronavirus. So based on the market's reaction, like I mentioned today, that may or may not be the case. We'll learn a lot about this relationship based on how the market reacts to suggestions that more accommodative monetary policy is on the way, whether that be statements from FOMC members or just the general way that the market reacts to upcoming data. So those are the primary fundamental drivers of sentiment today. Let's jump in and take a look at price action. So as usual, starting with the daily of the S&P, and yesterday when the video was ending, the market was trading up and testing the 200 EMA as well as this level of former support to see if it's going to now act as a level of resistance. The market also showed that these highs were relevant. We'll see when we get up there. It may not be. Right now, it's pretty much we're just being pushed around by headlines. So this is the daily. Let's drop down and take a look at the hourly. All right, and also for the sake of time, I've gone ahead and cleaned up the levels coming into the video. So just as a quick recap of what we've been watching, this 3100 level has been a major level that we were watching going into yesterday. Coming in today, we came in, and when we traded up, this move right here, and we'll take a closer look on the 5-minute, but this is when the surprise rate cut was announced. We closed back below that and sold off down to this 3,000 level that we've been keeping a close eye on. We're just about at that level now, and we are poised to close under it, but we'll see. So let's take a closer look and get a clear idea of how price traded on the 5-minute chart. All right, here's the 5-minute chart. As you can see, the market opened right here, and from the close yesterday, we just chopped around in this range until we got that surprise announcement. So just prior to the announcement, market took out some stops down here below this level for these overnight swing lows, and then rallied straight up Came back down to test this level right here. Let me get my box. Came to test this level right there and just absolutely demolished it, and traded pretty much down after retesting this 3100 level. So it's a pretty important level still. This was a huge event, which saw us just chop right through it. And then after that, we kind of tested it for resistance, but it may not be as clean as a level moving forward. We'll have to see. It's very possible that will be when we come back. But for now, on a shorter time frame, this 3050 level is pretty important. We do have some other zones, but for the most part, we've just been selling off ever since the announcement. So to just look at our levels moving forward, the most important zones, we've got the 3100 zone very clearly. This 3000 zone is still very important. Below the 2900 isn't as doesn't look like it's going to be as relevant. We'll have to see. I had to go back to August of 2019 to pull out these daily levels. So these daily levels below range from 2780 to 2822. So we'll see. I would suggest that you keep a very close eye on how the market responds to any talk of further accommodative monetary policy. The jobs number on Friday is also going to be huge, so we will just keep an eye on what's going on and check back tomorrow. Thanks for watching.